What's up, everyone? It's Scotty with Money Investing. So a very uneventful day for the markets, and very much sideways. The Dow was up a little bit over 60 basis points. S&P was more or less flat, and the Nasdaq was selling off on the day. But we do have a serious problem on our hands, which I wanted to address in this video. And I also talked about it in another video earlier today, talking about market breadth. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time, and a link to our Discord and Patreon is going to be down below. There is a 16% annual discount till the end of this month, so we're looking at another 4 days till you can take advantage of that 16% annual discount and get access to, of course, all the buy and sell alerts, options alerts, trade ideas, all the benefits, including the private videos, tutorials, and all the Discord channels as well. So link's going to be down below, and we'd love to have you on board. So let's just dive right into it. And I wanted to show you just one screenshot, which I think is going to be very interesting. And this is just my watch list of all big tech companies, right? We're looking at Google, Meta, Microsoft, AMD, Apple, Nvidia, Netflix, Amazon, Tesla. These companies combined control about half of a NASDAQ 100 and about, I would say, like 35 to close to 40% of the actual NASDAQ. Might be a little bit lower, but S&P 500, we're looking at closer to 25%. So 1/4 of the S&P 500 is pretty much in these 8 companies or 9 companies I have over here on this list. And this is both, I would say, like a pro and a con, but it's a bigger con because what happens is, again, we've talked about market breadth, and you can take a look at what happened with the markets today. Sorry about that. This right here was what happened with the markets today. So you can see Dow Jones up 60 basis points or 0.6%. S&P 500, take a look at this, 0.16% green. And we had over 365 stocks pushing higher. 365 out of 500, only 125 selling off. And yet still, the markets were not green enough. They were more or less flat. We were only up 16 basis points. The NASDAQ, the ratio was more like 50-50. So we had 46 stocks selling off and 46 stocks pushing higher, 55 selling off. And yet we had a pretty sizable down day, right? 0.74%. And in the NASDAQ, again, we had more stocks pushing higher, almost 2,000. And yet the market, or the NASDAQ specifically, was down close to 0.5%. I do strongly believe, and I've mentioned this before, the market is very much concentrated on these names at the moment. And the more concentrated we become, the lack of breadth is what's going to be concerning for the market. Because I put together another chart, which is quite interesting. So what you have over here is an index that I've actually created, which is Meta, Apple, Amazon, Netflix, Google, Microsoft, Nvidia, and Tesla. So all the ones that we just looked at, right? Except for AMD. AMD is not part of it. But the bottom line is, if you kind of include all these companies and create an index and you compare it with the NASDAQ, it is identical. It is literally identical. You can see how they move pretty much together every single time. They go up, these set of stocks go up, NASDAQ goes up. Every time it comes down, it comes down. You can see, like, even up until like recently, it is very much in line with each other. If you go back a little bit, you can just see the similarity between these two charts here. They're almost, again, like I said, identical. Every time these set of stocks go up, the index goes down. So the point that I'm trying to make is that because of that lack of breadth here from the market, and because of how dependent the market is in these names, the rally itself is going to be a lot less sustainable because, these stocks can only go up so much. I mean, you've got Nvidia trading at 265, 24 times sales, 70 times earnings. You've got Microsoft trading at 14, 15 times sales, trading a little bit over 20 times earnings at 276. You've got AMD almost at $100, 30 times earnings, right? A little bit over 6, 7 times sales. Once again, getting a little bit on the overbought side. Apple also breaking out of its resistance levels. Netflix has been on an absolute tear. Meta, not to mention, is now overbought as well. Been rallying since low 86 to now plus $200. And of course, we've got Tesla at 191. It's been pushing higher as well. So you've got a lot of momentum behind them. The last 3 months, they've been just doing nothing but pushing higher. They've been rallying, and rallying. So if they start to pull back, which they did today, I mean, Google was down almost 3%, Meta was down 1.5%, Microsoft was 1.4%. AMD 1.3, Apple 1.2. So a lot of these names were down 1 to 2%. Well, you're going to have a day like this where nothing really happens, even though other sectors are pushing higher. So if I go over to the sector heat map just right now, let's take a quick look. You can see energy, big performer. Financials, big performer. Consumer defensive did well. We had industrials, we had healthcare. A lot of these sectors, it was a more broad-based rally, but because the top left of the screen looks like this and big tech was selling off, the markets didn't really find any footing to push higher. What's also interesting is that if you take a look at the last 3 months performance, right? Last 3 months. And last 3 months, remember, the markets are higher. S&P 500 is up close to 5%. The NASDAQ is also up close to 20% on what? On this, right? Take a look at last 3 months, how we are so concentrated on the top left, right? So this is not a broad-based rally at all. And for it to be sustainable, it has to be broad-based. For it to be more, for it to like really sustain over the longer term, we're talking back up to all-time highs, it needs to be sustainable. There needs to be strength in other parts of the market, because if we don't, and if you're only dependent on just one sector, which is big tech and some of the more technology-oriented companies, unfortunately, it's going to be not that sustainable, because they are going to run out of steam, they're going to run out of gas, and that's it. Then other sectors need to kind of help the market in finding their footing. But in the last 3 months, you can see it very clearly. I mean, Microsoft, Apple, Meta, Google, Amazon, Tesla, Nvidia, you got TSMC, AMD, all these are the ones that have really pushed up, whereas all the other sectors have been down. And market money's been coming out of these sectors, going into big tech, and that's resulted in a very strong rally for the market. Now, going back over to the market breadth, and this is the Fed funds futures, and this is where we are right now. The market's pricing in a pause in the May meeting and kind of staying there in June, and then pricing in, I think, 6 cuts, 1, 2, 3, 4, 5, 6. So 6 cuts priced in right now. We've come down from about 9 and 8 craziness down to 6. And we'll continue to monitor, how this evolves over time. This right here is the economics calendar, which I've already mentioned in my previous videos. So again, Monday is done. Tomorrow we do have consumer confidence. We've got the FHFA house price index, along with the Case-Shiller home price index and wholesale inventories. And we've also got the report coming out from Michael Barr, who is going to be releasing the review of SVB failure May 1st. So that's going to be very interesting as well. He's the one leading the investigations with Silicon Valley Bank, which was sold to First Citizens for, pennies on the dollar, $16.5 billion. And they're getting assets worth over $72 billion. Absolute steal deal. Pending home sales coming out on Wednesday. And of course, we got the most important GDP numbers on Thursday, as well as the personal consumption expenditure, the PCE, and the core PCE coming out on Friday. So Dow closes nearly 200 points higher. S&P 500 notches third straight advance as bank shares jump. So again, this is the heat map. We've already gone over that. And energy was up, financials were up, industrials were up, healthcare, basic materials, right? Almost all sectors green. But because technology and comm services were down, the markets were very flat and the NASDAQ was lower. Same thing in the last 1 week. You can see a lot of momentum to the upside, and energy, comm services, healthcare, defensive, financial, all sectors green except for utilities and real estate. And over the last 1 month, it's only comm services and technology that's kept the markets higher. Every other sector is straight up down. So you can clearly see that, right? I mean, it's just not me making something up. It's right in the data, and you can see how other sectors are underperforming, and we're not getting a broad-based rally. We're getting a concentrated rally. We're not getting a diversified rally, but instead a very concentrated few names pushing higher and helping the market. That's about it. So lean hogs, feeder cattle, live cattle, natural gas, sugar prices all pushing higher. Coffee, orange juice with a big sell-off, and we got lumber prices also pulling back. Bitcoin's back down to 27,000. Ethereum just a little bit over $1,700. Now going over to the VIX, it was down over 5%, so a little bit under 21. Coming back down close to 19, 20 levels. We have seen a lot of volatility recently for the VIX, of course, with Silicon Valley Bank failures, all the other bank failures. We've seen a lot of back and forth in the VIX, and crude oil prices here, once again, seeing a lot of momentum. So they are green, up over 5.26%. Don't forget about this chart. I actually did a video on this. Again, recently we talked about how analysts do expect energy to actually be a outperformer in the next 12 months. And right now, as you can see, that energy is the worst performing sector. It's actually improved a little bit today. considering that energy stocks were higher. So if you come over to the energy watch list, we were green for a lot of names. So Exxon up 2%, we got Chevron up 1%, Devon Energy up 3%. So we did improve a little bit, but energy has been one of the worst performing sectors so far in 23. But analysts also do believe that there's going to be a massive shift in the market, and energy is going to end up performing one of the best ones, and tech is going to come down. Keep a close eye on that, and we'll see how that plays out. Bitcoin here, once again, struggling at around 28,000, so we're just kind of sliding sideways, and this is a resistance at 28,000, so very much at resistance at the moment. And Ethereum also, trading at support, or pretty much getting rejected here. It was trading at support, but then we broke down, and now that is going to be a resistance level to watch for Ethereum as well. Talking about the yields, and we are now very close to being positive. Once again, we are at negative 40 basis points for the 10-year versus the 2-year. It's still up close to 14%, and the 10-year yields are down to 3.5%. So once again, we've crossed back over 3.5. Of course, we've traded as low as 3.3. We broke down briefly below 3.3, but we kind of recovered back higher. So again, it's going to be quite interesting to see where yields end up going moving forward. We still have that trade on FAS. I'm still long. It was up another 4% today. So we'll continue to add more shares. And if it does sell off, we'll be looking to dollar cost average. And my price target, the optimistic target is going to be all the way up to $91. Again, that is a super optimistic target. That's an upside of close to, I think, 60% or something. 70%, 69% to be precise. But a more reasonable target is going to be closer to $70. That's going to be another 32-35% upside for FAS. So this is one of the trades that I do have personally going on at the moment. Now, anyway, going over to the S&P 500, and once again, we're seeing a lot of consolidation, right? We're not seeing a lot of action for the S&P for the reasons that I mentioned earlier, because there's not a lot of market breadth behind these moves higher. But instead, it's very concentrated on these names. And resistance is going to stay up at 4,100 to as much as 4,200. We've already talked about it, mapped it out in our chart. That's the red rectangle for the S&P. And support level is going to stay up at 37.74. So this right here is going to be that level to watch for the S&P 500. We're seeing a lot of consolidation, that's for sure. So again, resistance is going to stay put at 41, 4,200, and support level, like I said, 37.74. And all we're really seeing is a lot of consolidation for the S&P. Talking about the NASDAQ here, and NASDAQ also just really a lot of consolidation and a red candle on a red day. So definitely selling off quite a bit here on the day today. So resistance is going to stay put at 12,280. So this is going to be that level of resistance, and support level is going to stay put at 10,000 for the NASDAQ. So those right there are going to be few levels to watch. Again, lots of consolidation sideways. We still have this as a support, previous resistance acting as a new support for the NASDAQ, and all we're really doing is trading sideways. So next up, we're going to talk about Apple, and Apple here very much, pushing higher, still validating that support at 157. But if you take a look at, where we are with the RSI MACD, again, it's a little bit on the overbought side. We're coming out with the negative divergence here. So we got to be careful with how Apple trades. Marginally speaking, there's not a lot of upside here. Sure, you can get up to 177, but the downside risk is just as much as the upside. So the risk-reward ratio really ends up being 1-to-1, and the trade setup is not super appealing for Apple at the moment. So 157, 158 is going to be that support here. And like I said, there is some technicality here, negative divergence with an overbought RSI and MACD. So got to be careful there. Talking about Amazon. Amazon is the only one that hasn't really moved much from its October lows. From January lows, it's only up a little bit over 19-20%, which I guess is not too bad. Apple is probably up the same, but it hasn't felt like Amazon has actually moved at all. So this is going to be that resistance, the lower highs. We're still in the context of this overall downtrend where, Amazon continues to trade down. It's been selling off since November 21. It's still down about 48-49%. Making lower highs and lower lows, and this is still going to be that resistance. We got a very tight support sitting roughly around in the 80s, low 80s, $81 per share, around those levels. Talking about Tesla, and Tesla here, lots of consolidation for this stock as well. I guess you could make a case for an inverse head and shoulders. This right here could be the left shoulder, a potential head, and then a potential right shoulder with a neckline sitting here, but we did kind of briefly breach that neckline over here. So it's not like a perfect inverse head and shoulders, but yes, we do have a very strong resistance for Tesla in the 200s, all the way up to as much as 225, 226 for Tesla. Support level is going to stay put at 175 to 165. So this right here is going to be those levels to watch. Again, I did a video earlier today talking about 3 stocks that are at the top of my buy list, and Tesla is number 1. But of course, at lower prices in the 120s, 130s is where I would be interested in adding more shares for Tesla. But nonetheless, support level in the 170s, resistance in the 220s. Right now, we're just going sideways. Talking about NVIDIA here, NVIDIA pulled back slightly, 0.93%. So again, overbought RSI, overbought MACD, getting up to that resistance at 292. So, got to be careful here because of the influence that NVIDIA now has. I mean, it's a 650 plus billion-dollar company, so definitely has a pretty big weighting on both the Nasdaq and the S&P 500. So resistance is going to stay at a 292, and support level is, of course, going to be. We've got a gap to fill here, and support levels are pretty much all the way down to as low as 190s for NVIDIA. Talking about advanced micro devices, so we are starting to see a bit of a pullback. It's not a surprise, right? I mean, if you identify some of these levels, right, it becomes a lot more clear. Over here, you'll notice RSI MACD was overbought, so you can kind of compare that to this. Over here, you can see the RSI MACD a little bit on the overbought side. Again, the price was over here, so we did see a pullback. So pullback here, and what's different here? Nothing really, right? I mean, we've got an RSI that's also overbought. Same thing with the MACD, and the price, if it does drop, is a potential setup for a pullback for advanced micro devices. So that's where we are, and we are kind of tapping onto that resistance here, $102, $103. So I wouldn't be surprised if we do see a bit of a pullback for AMD, considering how overbought technically we really are at the moment. Talking a little bit about Meta platforms, and actually Meta here was down about 1.5%. So $200 is going to be that support. So 198, close to $200 is going to be that support for Meta. That's the level that we're watching, and resistance all the way up to $222 per share. Talking about PayPal, and PayPal on the day was also down. So red candle, it actually was green at one point, so it sold right back down. Resistance is going to stay put at these lower highs, and we got a support staying put at $67 with my fair value sitting roughly at $70 per share for PayPal. Talking a little bit about Square, and Square actually did recover and rally quite a bit, so up 6% on the day, so very strong move to the upside, pushing up to over $64 per share. So lots of momentum driving this stock back higher. The fear seems to be gone, and it's obviously was very oversold. RSI MACD was incredibly oversold, now starting to push right back up. $59 is going to be that support, and that is still going to be that level to watch for Square. If we do break down, the next level is going to be at $51, $52. And we got a resistance all the way up to as much as $83, $84. Of course, we got a gap to fill over here after the report came out. So talking about Netflix now, and Netflix on the day was also down 22 basis points, so still pushing higher, so doing well. But that is going to be that resistance level to watch at close to 367 to as much as 379 for Netflix, and support level is going to stay put at 276 for Netflix. We were oversold, so we were starting to see a little bit of momentum back up for Netflix, so that's good. RSI is pushing up. MACD also crossed above that signal line, so my target's up to 379, close to $380 for Netflix moving forward. Talking about Google, and Google now starting to pull right back down. Again, not a surprise, right? I mean, we were kind of tapping up to that resistance at 108. RSI was overbought, so was the MACD, so it's only logical for the price to pull back a little bit, take a bit of a breather, because it's pushed up close to 19% in the last just few days. 10 days, 2 weeks, it's pushed up 19, 20%. That's a pretty significant move to the upside. So now we're starting to see a bit of a pullback for Google, just taking a bit of a breather at the moment. Talking about Microsoft, and Microsoft here also starting to pull right back down. So again, RSI, MACD, a little bit on the overbought side. Still not quite getting up to $292. That is the next resistance for Microsoft. But if you do pull back, of course, I've got a buy target at 230. As low as 225. I'd be interested in taking advantage of that. And of course, support level is going to stay up at $218 per share for Microsoft. And last but not least, we got Shopify, and Shopify here on the day, very much trading sideways, not really moving much, consolidating at the moment. Resistance is going to stay put at $54 per share, and support level is going to stay put at $41, closer to $42 at the moment. So hope you guys enjoyed this video. Again, we do have a lot of economic reports such as GDP numbers, inflation numbers coming out later this week. Michael Barr is also going to be talking tomorrow and the day after. But, the problem with the market right now, unfortunately, or at least what the concerning part is, that, the market's very much concentrated on a few names. And if they go up Market goes up. If they go down, markets go down. And we're not getting a very broad-based rally to begin with. So there is a divergence that I showed you guys in the percentage of stocks that are trading above, below their certain moving averages with respect to how the markets are doing. And you are seeing a bit of a divergence play out in that part of the market. So that is a bit of a blind spot. Definitely keep a close eye. Hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. There is a 16% annual discount available for all of you before the end of this month. So always happy investing. I'll see you all in the next video.